Good morning to students. In this sections, actually explain the meaning of the final accounts and also how to prepare the final accounts. First, what do you mean by the final accounts? Final accounts simply means accounts know the final result. Final result means what the result of the organization end of the financial period. The financial period, the accounting period usually between month between 1st January to 31st December, or 1st April to 31st March. So 1st January to 31st December, that is the during the year, or financial year 1/4/2019 to 31st March 2020. So that is called, okay, 1st January to 31st December and 1/4/2019 to 31st March 2020. Final accounts 3 consist: trading, profit and loss account, and balance sheet. Account statement, that is the statement together, that is called the final accounts. The accounts and statement is prepared to show the final result of the profit or loss, earning the profit, earning the loss, the accounting period, and also financial status and the financial accounting period. The different organization, how the different final accounts, depending upon the nature of the organization, the appearance of the title of the final accounts will differ in case of, for example, the trading concern, definitely the final accounts consist of the trading, profit and loss account and balance sheet prepared. Trading account, a concern which purchase of the goods and dispose of the sales earning the profit. For such concern, trading, profit and loss account and final accounts. Then the manufacturing account, the final accounts including the manufacturing, trading, profit and loss account and the balance sheet. So what are the features of the manufacturing account? A purchase of the raw material and convert into finished product, and those finished products are sold and earning the profit. So they are the final accounts. In case of banking companies, we can see that profit and loss account and the balance sheet. In case of public concerns, which means railways, electricity, etc. So that can be prepared to the revenue account, net revenue account, capital account, and also general balance sheet or the annual accounts. First two are the revenue account and the last two are the statements. So that is public concern which can be followed to the final accounts, so prepared to the final accounts. So generally, a manufacturing concern or a business concern, so that is the three parts of the trading, profit and loss account, and also prepared to the balance sheet. Another form of organization, which are intended not for making the profit, but not for rendering services to the society, hospitals, clubs, educational, etc. They two part in their final accounts. It consists of income and expenditure and also prepare the balance sheet. In all these cases, the special features is that the final accounts are divided into two parts. The first part is account. The second part is statement. Both these account is the statements together the final accounts. The first part is ascertain the profit or loss of the organization. The second part is the review to show the financial status of the business. So that we can study to the trading, profit and loss account and also balance sheet. Okay. So next, so we can study how to prepare the final accounts of trading concern. Already the final accounts of trading and profit and loss account. Trading account. Let me explain the trading account. Second, only profit and loss account. So trading account is prepared of the business period of the time to ascertain the gross profit or gross loss. Gross profit is already the existing cost of the sales or cost of goods sold. And the cost of goods sold means opening stock plus purchases plus direct expenses minus closing stock. So that is the prepared to the trading account. So debit side, two opening stock, two purchases. So let's purchase returns. So that is the net purchases. So to direct expenses. Direct expenses, wages, manufacturing expenses, freight, carriage or carriage inward. So that is called direct expenses. It's also debit side. Okay. Then credit side, by sales, less sales return. So sales returns, another name is called return inwards. Sales return, another name is called return inwards. So that is the net sales. And final one, by closing stock. Okay. So credit side is more. For example, credit side is 5 lakhs total 5 lakhs, and also debit side total. So opening stock plus net purchases plus direct expenses, it will be added to the some amount only for the 3 lakhs. So what is the differences between? So 2 lakhs. 2 lakhs means, so that is called the gross profit. So the gross profit, it will be transferred to the profit and loss account. So trading account, how to prepare the trading account? So the business organization or business partnerships, so anyone the business, so we will be prepared to the trading account. So how to earning the profit or loss? So sales return. So sales returns, another name is returns inward. So that is called the purchase returns. Another name is the return outward. So that is called the net purchases. So what are the direct expenses? The direct expenses, some of the examples: wages, manufacturing expenses, freight, carriage inwards. So that is the differences between to the gross profit. Okay. Next, we will be prepared to the profit and loss. Trading account mainly, so we considered so 2 items, and sales and cost of goods sold. All those items connected with the cost of goods sold as well as the sales must be recorded the trading account. So once again we will be repeated. Opening stock plus purchases, direct expenses are debit sided to the trading account. Sales and cost of goods sold are cost of goods sold, closing stock we have been credited. So to be trading account. So hereafter, if you find out the differences, so differences means so credited in more, that is called the gross profit, and debit side is more the gross loss. Second part, profit and loss account, intend to find out to the net profit. So find out to the net profit, how to be calculated to the net profit. The gross profit as we raised by the indirect incomes and reduced by the indirect expenses is called the net profit. So profit and loss account. So what are the indirect expenses? Indirect expenses means salaries, rent, printing and stationery, postage and telegram, then advertisement. So many indirect expenses: salaries, rent, printing and stationery, postage and telegram, advertisement. It is a simple expenses I will be given. So indirect incomes by rent received, by discount received, by commission received, commission paid. So that is called indirect expenses. Discount paid, so that is called indirect expenses. So some of the examples will be given. So indirect expenses, indirect incomes. So that can be prepared to the net profit. Okay, right. Once again will be repeated. Net profit is calculation. The gross profit has increased by indirect incomes and reduced by the indirect expenses is called the net profit. That means the purpose of the calculation net profit. So we have to consider it. So we have to consider means indirect incomes and also indirect expenses. The gross profit and the indirect incomes credit side of the profit and loss account, indirect expenses debit side of the profit and loss account. So net profit finally and trader and also business concern, we have to prepare the statement of the balance sheet. So whatever the balance sheet is left in the profit and loss account, net profit simply means after the prepare the trading profit and loss account. Balance sheet is nothing the statement, left side liabilities and right side of the asset. So finally we have prepared the balance sheet. Balance sheet. So left side of the liability and right side of the asset. So liabilities. So what are the items will be appeared to the liability side? So capital. Capital, it is a essential concept. Capital means, suppose you go to the company accounts, capital means capital, a company collecting by the capital, inviting by the shares through document known as prospectus. It is a common sale. So capital, it is a essential concept. So capitals invest to the business. So capital minus drawings. So drawings, so the personal use of the money. So then will be find out to the net capital. So plus net profit. So net profit earning to the profit and loss of net profit. So that is the net amount. And then bank loan, and then outstanding expenses, sundry creditors, bills payable. So these are items to the liabilities. Simply that. Okay. So it is the main important items: bank loan and outstanding expenses, sundry creditors, and bills payable. So that is the left side of the liability. And assets. Assets, it is the fixed assets. So fixed assets, land and building, plant and machinery, furniture. So that is the called fixed assets. Loose tools. So that is called the fixed assets. Current assets. Current assets means it is easily converted into the cash within the period of the year. So cash in hand, cash at bank, bills receivable, sundry debtors, closing stock, short-term investment, and then cash in hand, cash at bank, bills receivable, sundry debtors, closing stock, short-term investment, prepaid expenses. So that is called the current assets. So liability, capital, drawings, net profit, bank loan, outstanding expenses, sundry creditors, bills payable. So current liabilities, so outstanding expenses, sundry creditors, bills payable, bank overdraft, it is also called the current liability. So balance sheet total, it is the same each and side. It is very important. So that is the financial position of the company or concern. Okay. So first we have prepared to the trading account. Trading account, it's the debit side opening stock plus purchases plus direct expenses. Credit side by sales by closing stock. So that is the main differences. Suppose credit side will be the more items, more amount, then the debit side is a less than amount. That differences between the gross profit. So next gross profit, it will be transferred to the profit and loss account. Profit and loss account we have prepared to the earning to the net profit. The company earning to the net profit. Okay, and also prepared to the final balance sheet. So that is the statement of the preparation. Okay, So next class we can starting the problem of the final accounts. It will be using to the first year students, become first year students. So how to prepare the final accounts? What are the three concerns? Okay. Thank you very much.